Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, September 9th. Stocks plummeted Tuesday due to continued concerns over financial firms and a sell-off in energy and material stocks. The S&P 500 fell 3.4%, ending the session at its lows, marking the largest one-day percentage decline since February 2007. Weakness was broad-based. 91% of the S&P 500 components posted a loss, and all 10 economic sectors settled in negative territory. Volume was on the heavy side, with 1.7 billion shares exchanging hands at the NYSE. Financials acted as the main drag on the market, with Lehman Brothers sparking much of the selling interest. Shares of Lehman Brothers plunged 45% as traders speculated about the firm's capital position after reports indicated that a state-run Korean bank is no longer in talks to buy some or all of Lehman Brothers. However, Reuters said that a Korean official denied those reports. The drop in Lehman shares prompted Standard & Poor's to place Lehman on credit watch with negative implications, citing the increased difficulty in raising capital. The financial sector fell across the board, giving back all of its Fannie Mae and Freddie Mac bailout gains and then some. Wells Fargo said it will take a non-cash charge of $480 million related to preferred securities of Fannie and Freddie Mac, which traded only 5% to 10% of par value following the government's takeover on Sunday. AIG declined 20% on fears that the insurance giant will have to raise more capital. The energy sector, down 6.4%, got clipped as energy commodities fell 3.6%. The losses came on expectations that Hurricane Ike would spare production in the Gulf of Mexico and OPEC would leave its oil output unchanged. Crude prices fell a steep 4.2% to $101.87 per barrel, which is the lowest level since April. The material sector fell 4.6% after commodities as a whole declined 1.7%. Steel companies were hit especially hard, falling 11.6% as a group. McDonald's bucked the negative trend after the company reported a hefty 8.5% year-over-year increase in August worldwide comparable store sales. U.S. comparable store sales rose 4.5% as consumers flocked to McDonald's relatively inexpensive offerings with strong demand for the company's breakfast menu. In economic news, the July pending home sales index fell 3.2%, which was worse than the expected 1.5% decline. Pending sales fell 7.5% in the Northeast and 10% in the West, while the Midwest was up 2.8% and the South was flat. This reading does not include any effects of the Fannie and Freddie takeover. As stocks fell, the long end of the Treasury curve rallied. The 10-year note rose 22 ticks, sending its yield down to 3.59%. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.